Well, let's return to the markets. Amit Nigam, the head of equities at Peerless Mutual Fund, joining us here live on Markets at Lunch. Hi, Amit. You know, over the last week, 10 days, we've seen so much volatility. I would expect that would continue till we don't know what exactly Trumponomics stands for. We've got demonetization back home. We don't know what the FOMC is going to decide either in the month of December. So how are people like you approaching the markets?
Hi, good afternoon. So you're right, the last week and a half have been pretty volatile. So starting off last week, we were all positioning our portfolios, our stance vis-a-vis for US election outcome. So whichever way, whether Hillary Clinton wins or Donald Trump wins. But comes a surprise was this demonetization exercise, which actually caught everybody off guard. Now this essentially happens because this move actually hurts the way the business is being conducted. Today a large part of consumer purchases happen in the form of cash, and if this cash is no longer available, then this transaction stops. And that is the reason why most of the businesses have at the initial phase are facing a pullback from consumers, because first of all the consumers want cash in their hands, and only once they have it in their hands would they go ahead and make the purchases. So the way we are looking at this is that for us we are very carefully looking at the companies that we like, the businesses that we like, and wherever the valuations have now corrected pretty steeply, and there are a lot of them where stocks would have come down by a good 25-30% from their peaks, we'll be more than happy to consolidate our positions. Whether we have already made the bottom, we are not so sure, but incrementally I think if you are able to purchase assets at a cheaper valuation, then our wealth creation possibility becomes a easier road ahead.
So what are you planning to do? Perhaps, for example, could you increase your allocation? You believe it's bottomed out, or you don't know if it's bottomed out, so would you look to increase your allocation, let's say to the real estate sector, the jewelry sector, where you see discretionary spending? What about banks? Would you increase your allocation in banks?
So we actually do not follow so much top down. We are a very bottom up house. We go ahead and try and identify good companies, good businesses which are well run in terms of the management capability and their integrity. Now, having said that, the way we are analyzing the unfolding of this event is that how would the consumption behavior of an individual change? If 15 lakh crores out of the 17 lakh crores of currency in circulation has been pulled out, then one has to understand very clearly that the consumption of both goods and services will take a hit. Now, how longer that hit will remain purely depends on what form of consumption that is. So the way we analyze consumption is that we have two big baskets. One is consumer, which is discretionary consumption, and the other is non-discretionary. Non-discretionary, again, we can further break it up under two heads. One can be unplanned, which is impulse purchase as we call it, or the other is planned. So let's say in a non-discretionary, something like a utility bill, or let's say purchase of groceries will fall under this category, and this will not take a hit as per our understanding. The second thing, which is an impulse purchase, which happens because I have some loose change in my pocket and I just want to nibble on that new chocolate which has been launched in the market, that probably will get hit, but not for too long, because once I have enough currency in my pocket, I can go and do that. Now, the other bit of a consumption which is less frequent but larger ticket, that is the discretionary bit of consumption which we are looking at. That, to our understanding, will take some hit for a slightly longer term. Now again, within this discretionary, if it is a large ticket planned investment, for example, if I want to upgrade to a larger LED TV, or I want to buy, or let's say if I want to get my house repainted, then this probably, to our understanding, can shift forward by another 3 to 6 months, whereas an impulse purchase, again, within that should also get delayed by about 2 to 3 months. So net, a large part of the consumption, which is more frequent, low ticket item, should not get affected too much, but the large ticket, less frequency would get hit. So therefore, whichever company today that we have already liked or we already had on our radar and is available at a good price, we are more than happy to increase our allocations in that company.
Okay, good to chat with you, Amit. Unfortunately, I'm going to have to thank you on this note. We're just completely running very tight in the show today. But good speaking with you.
Thank you very much.
Okay, that's the word coming in from Peerless Mutual Fund. In the meantime, let's also check in on what the European markets are up to and how they have kick-started trade after what looked like a very listless Asia, listless India as well. And Europe too has started off extremely tempered. Simon Derrick, head of global currencies research at BNY Mellon, then joins